for everyone that's in here, we're going to be going over pivots. And what pivots basically is if you've never seen it before, this is pivots right here. It's an add-on that the IM Academy provides. It basically is there to set a range of market. Now, when we're talking about range of markets, if you've been in the opportunity for a while and you've heard of the Candlestick Bible and you'd had the opportunity to read over it, you'll notice that one of the main market conditions that we interact with is a ranging market. And it's really important to know how to trade this kind of market, especially to be on the right side of the longer moves, if we call it the longer moves, more influential moves. If you catch them at the edges of the range, you're more likely to see the profit on the upside. So I'm going to remove this so it doesn't confuse anyone. But right now this is our range. This is NAS 100, the market we were trading earlier. It's the same graph as this right here. So what we were looking at today for this buy trade, that has taken a while for it to even get up here, but this is the buy trade we were looking at today. This is the exact same market, and that buy trade beginning down here. So when you come into pivots, one thing you'll notice is these numbers, the letters here, R8, R7, R6, R5. There's P4 and then S3, S2, S1 and SO. Also -1, -2 and -3. So this is like our range. If you think about this being the top of the range all the way up here, I was going to write top, but I just realized how hard it is to actually do stuff with that, so I'm not going to bother. But we can see this is the top of the range, so we'll put a T right here, and this being like the absolute bottom of our range down here, giving us kind of a scope into where we can see the value reaching, or possibly getting to. If you had enough capital, you might assume that, okay, I have until the top of the range on a sell trade, in terms of like setting a stop loss. I can afford to go this much into negative, and it gives you that as an insight to know that these are the highs that you'd have to compete with in order to break out of this range. So we can see price clusters in a sense here. We have a lot of consolidation, so price kind of clusters, and the ranging market is simply the range of this structure. We see structure kind of forms and moves along. So if you just take these boxes, this is how I visually used to see it when I first came into the opportunity. A structure forms down here, but the structure originally was here, and then the structure previous to that was up here. So it's visually like a structure box shifting and moving over. So the ranging market gives us that focal point. It gives us that kind of that structure box to look and kind of guess where the values are going to be within. Now the beauty about this range is we understand that at the top of the range and at the bottom of the range is serious levels of support and resistance. So at the top of the range we have that serious level of resistance, and at the bottom of the range we got that serious level of support. So this gives us ways in which we can trade or set up or wait for a setup, in order to get into the market at the right time, at the right position of range, giving us the most reward for it selling back in towards the center of the range or towards the bottom of the range. Pivots is simply about support and resistance lines, and that essentially is what a ranging market is. It bounces between a strong level of resistance at the top and a strong level of support at the bottom. So if we think of this ranging market right here, so we got the resistance level at the top. Think of that as R8, so this blue line right here. So if I move this over just for a sec, the top of our range is this blue line right here, and the bottom of our range is this blue line right here at SO. So we have R8 at the top of the range, SO at the bottom of the range. Now when pivots is in play and we're seeing things live, this is the 15-minute chart, which keeps it on the lowest of time frames. You can see here we have minute 15, minute 30, the hour 1, the hour 4 and the daily. Minute 15 is going to be the best time frame for you to be looking on what price is going to do in the immediate. There is different strategies that you can use on pivots. So strategy 1 is simply just the range of market that is set in that time frame. It's not labeled, it doesn't give you any recommendations, but the strategy 2, if you were to click on it, you can get a deeper insight to NAS. They'll give you some suggestions. So at these levels they advise taking profits for a buy, and also having sell stops at these levels, so that if price exceeds it and then sells back through, you'll enter a trade for the sell back in towards the range. We also have entry prices for buys, that it's insinuating that if we return to these levels we might exceed these highs and break this R7 level and exceed upwards of here. Again, they have stop losses set for the buy, which you would enter at this point, and again sell stops if price decided to turn around at the pivot point in the middle and go towards the bottom. So strategy 2 can be a lot more helpful at the beginning of your journey. I used to use it more frequently than strategy 1, but then I didn't like the influence of someone telling me kind of what was going to happen. I know a lot of the time they're right, and that it can be very rewarding. Eventually, maybe when the market opens up, if we get that big buy up at the start of market open, this buy trade that they called will be beneficial. But for right now, as you can see, you'd have entered that trade, gone into profit, and then gone back into negatives here. So again, I don't normally tend to look at the strategy 2. I'll look at strategy 1 because it gives me the clearer range in market, and it also gives me the +1 and +2. Now we take a look at the strategy 1 minute 15. So how we're trading this is what's important. How are we trading this? It's quite clear to see that key points in this range in market, we've been at the top in overbought conditions. Anything above R8 is considered overbought conditions. So we've been in those areas quite a lot. And if we just highlight it, all this area is overbought conditions. So we've been in there quite commonly. Every time we reach the top of the range, we can see price has clearly interacted with what looks like this little cluster of values is coming across, and it is a key level of resistance for it. So we get those 2 turnarounds there, and we see price sell back in within the range. Each time we've sold into the range, you see at this blue line here, again, the P4 level, the key pivotal point this is. So if you've got notes, write this down. R8 is your top level of resistance, SO is your bottom level of support, and P4 is your middle pivotal point, your middle level, the center of the range, and the pivotal point. So if everyone notes that down and remember that, that's always going to help you, because you always know when you're in the middle, the pivotal point means you have equal opportunity to go one of 2 ways. If you sell cleanly through this pivotal point, you will 9 times out of 10 see prices at least attempt to touch the bottom of the range. If you doji or we pin bar off of the pivotal point in the middle, 9 times out of 10 we see price turn around and reapproach the top of the range where it came from. And that's simply what had been happening in this market over the past few days, and you would have been able to get a lot of good entries on this pivotal point. Now we see price in the overbought condition over here. It sells back down towards here. We get a clean break of R8, so we're re-entering into the zone, and price re-enters and tests P4. We get a nice pin bar, and again a big wick rejection off here. We had it beforehand. It wasn't even a pin bar, it was just clean rejection, and price decided to turn around. So every time we touched that P4 level and we had clear rejection, or we had price action at that level, so here bullish engulfing, here we have a morning star pattern, doji in this moment here, and we had a lot of consolidation, but eventually went and touched R8. So the way that we interact with pivots can really help us get these kind of clean entries and understand where we're going in terms of the value in this range. So as it sells down and rejects, we know that it's going to go try and touch the top of the range again. So we can commonly throughout the day constantly target these short take profits, which are, I think in between every line or so is about anywhere from 10 to 15, well maybe even 20 pips between each line. I'm going to figure it out for you guys real quick. It's a lot easier to be able to calculate how many pips you're going to achieve. But if we go from P4 is at 11,640, R5 is at 11,660, so yeah, they're split up by about 20 pips each. So if you're catching P4 to R8, well that's 1, 2, 3, 4 levels. You should be looking at about 80 pips. Now that's very decent to be able to guarantee, or not guarantee, at least predict 80 pips being caught, potentially more as well when we've returned to +3 levels. So at this point you're looking at over 100 pips movement up in that direction, but it's simply off of price action, knowing at what point in the range it is at. It turns to that pivot point, it forms a morning star, it forms a bullish engulfing, it forms pin bars, it forms big rejection. Then we can look at the market with confidence that it's going to buy back towards that resistance. So if we go to the 1 minute, we can see a bit more of price action, and things will become a lot more clear for us, because the 15 minute doesn't really show the full story. So what will actually have occurred on the 1 minute when these things were going on? we actually returned here, and we can see that these letters have S and these letters have R. So above P4 they have R, below P4 they have S. What this simply means is these lines here are more lines of support than they are resistance, so price finds it quite easy to buy back through them, but selling down past them it struggles because they're levels of support. So as we approach the bottom, the support becomes heavier. It's less supported down here. As it approaches down here, there's a lot more support trying to push it up. Again, there's a lot more support at this level and so on. So as we see, price comes down here, we get a morning star formation right here on the 1 minute. We see big sell candle, consolidation doji happens right on that S3 line, and then price buys back up, so we get that those 3 candles equal in the morning star. And from there you can enter the trade from there, and you don't have any drawdown from that point. Price returns to R8 and exceeds to overbought conditions. So that's commonly what happens when we see this kind of interaction at this level. Yes, it did drop down below P4, so again you have to stay on top of these things. Again, another trigger for this trade would have been the pin bar and the bullish engulfing off of P4. That was actually later on that occurred. So even if you didn't take this as a confirmation, you didn't take this reversal as a confirmation, you could have taken this as your confirmation. And it's just good to know that at P4, at the middle pivotal level, it's deciding to push away from it, which inclines price really wants to come back towards the resistance level. Similar thing for the top of the range and the bottom of the range. We want to be able to look and see where we can catch where that has happened before. This is a key example. I know if we go back to the 15 minute, it looks like a big drop off. If you just scroll to the right, get back to where we were. This big drop off here, look at this movement. This is huge. This is within an hour. So there's 15 minutes. If you want to include the first candle, 15 minutes, half an hour, 45 minutes, 1 hour later, you're about 80 to close to 100 pips up. So how can we foresee this happening? Again, it's at that R8 level, so we already know we're at the top of the range. So when we're at these levels, we've seen that it's common for us to exceed these levels. But what have we noticed from this point here? Well, from this point here, for me, we've started to make lower. Let me just lock these on. Making lower highs. So yes, price returns and tries to come back at this point, but we're still making lower highs. So in the immediate, if I was in this market, I would be thinking about these lower highs and this slow sell-off movement. Yes, we approach P4, but we return back to R8. If we get some kind of price action around R8, we can see how happy price has been to just return to P4 and bounce happily back. Return to P4, bounce happily back. Return to P4, bounce back. Return to P4, bounce back. So every time we got to R8 or these overbought conditions, it was right for us to be looking out for sells, really and truly. Now on the R8 line, the top of our resistance, we notice that on the 15 minute we get a bearish engulfing. So as soon as you see this anyway, this bearish engulfing right off of the R8, it's really late to enter at this point. This is why the 1 minute and your ability to be able to mark this up in the immediate is going to be extremely helpful for you. Now if we get to the start of that big drop off, which we got right here, we'll probably be able to see this building up beforehand. So we've bought up to R8, we can clearly see that we've broken those highs, price has bought right up, and then we start approaching +1, but as soon as we touch +1, big rejection. So there's a lot of rejection that comes from there, and we bearish engulfing actually halfway between R8 and +1. Now this starts our selling momentum. Yes, it struggles to break through R8 this first time, and we get that retest back into the area. But after that second bearish engulfing and then this tweezer top formation here, if you weren't already back in the sell, then something's wrong. If we see price action like this at these levels of R8, you can start to really take into consideration where the value is in terms of the range and what it's going to do from here. Just like in the past, we've tested P4 quite easily. Even if you want to take P4 as your take profit, like no one is going to turn down potentially 80 pips right in your face. It's very simple. Take price action at the top and the bottom of range, and also read into how price is moving around that pivotal point. And that's one of the best ways to really utilize pivots. So go to the daily here. So this range really and truly is set up around understanding that at the point that we're at right now, it's in a retracement move, right? These are daily candles as well. So this is like almost a week's worth of retracement selling off. Like, we understand that here we have structure right here. We understand that. Everyone knows that. Everyone sees that. So for us to test downwards, it's saying that -3, sorry, is as far down as we can really sell within staying in this range. So if we sell lower than this, so if price sold, if this sell would have happened and it would have exceeded this level and continue to sell in here, we really and truly would move from what we were talking about earlier in the lesson about these structure zones, these structure boxes. It would really move from the one it was in into this one. Now that's like the range being broken. So anytime we approach these bottom of ranges, this is necessarily this technically is a swing point. There's a lot of support that's going to come from here to help price move upwards in the eventuality of things. So the bottom of the range really is just looking at the likelihood of price coming down and touching old resistance levels that have turned to support and supporting the buy trade. That's why every time it came near to SO, every time we've touched near to SO, price has shot back up. And really and truly, from looking at the range in the past few days or so, even on the 15-minute chart, we can see how it really hugs that top side. And when we've sold down, it looks to get out of there pretty quickly. It likes to sit comfortably above P4, but when it drops below P4, we quickly move down. Yes, we do venture down, but it's very quick to turn around from there as well, and price looking to get back up to the upside. And that is because I do heavily believe that this is our ultimate swing point for a long-term buy, and I've been saying this all week as well. If you've been on the streams, you'll have heard it. You can see the daily candles, how we wick towards the top of them, towards the bottom of the range, but we close tightly within this zone. So even just knowing this can just give you a lot of options trading during the day. You already know that, okay, this is quite high up in the range, but it's near the middle. If I was to sell down during the next day, we know that the likelihood of price returning from these levels back and closing within where the average of these values close. So this is something else we can use to our advantage. We can use it in different markets. It's not always the best thing for indices. I do really recommend using pivots for scalping, though. It is one of the best tools you can get for scalping. Understanding where you can get in on markets is probably the most helpful thing, knowing that when you're approaching RA or SO, that you can be prepared, or at least ready for a sell movement or a buy movement that's heavy in the next direction. And also you can know for take profits. If you're going to sell at RA, you can know you can take profit at P4, you know you can take profit at SO. There are also certain areas within this range that I didn't speak about, but they're known for common places for price to turn around, which is these yellow lines here, which is just in from our bottom and top of range. So the next level inwards will be this yellow line here. Now price commonly stops and turns around at this point. It's almost as if price realizes it doesn't have enough momentum or enough buying power or selling power to really compete with the ends of our range. So if you see price buys up here, turns around at this point, comes back towards the middle pivotal point, reapproach again, turns around, tests the pivotal point. So we can see price commonly moving in these zones, whether it be from the pivot point to this zone like this, or whether it be from the pivot point to this zone here like this. So again, we can catch some decent profits in those ranging periods when we're stuck between either testing the top or bouncing from the middle. Again, this is why noticing where the pivot point in your range is really important, and just understanding physically that around 11,640 is going to be the middle of your range. Well, then you're going to know on your charts, on your markups, okay, well this value is going to get returned to quite often, and if we put a line literally where that is, we see literally nice and solid touch here, nice and solid touch here, here, and commonly throughout all of this range in market, that this value is passed through multiple times. You see price approaching R7, one of the most common points for price to turn around, and it does stuff like this. We form candlestick patterns like this, get in a sell. We form candlestick patterns like this, get in a sell. What's this? Tweezer top, get in a sell. Bearish engulfing happens around R7, get in a sell. Then this huge bearish engulfing happens, and we actually test all the way down to about SO. But then you pin bar away from S1, which is equivalently as equal a point to turn around as R7. So we just see it happen from here. It bounces from top of the range to the bottom of the range. Yes, it's not the absolute top of the range and the absolute bottom of the range, but we see what's going on here. And as soon as these things happen, we form that pin bar. There is no coming back to this level. You can set your stop loss around these S1 levels, and it was never getting hit. And then we can just move it up casually with us and steadily bring it up to the top of that range. If we exceed P4, which we struggled, you can see rejection here. And then eventually we bought through it, but we retested down, and then we bullish engulf from it. As soon as I get that bullish engulf from here, I know I can set my stop loss at P4, and happily from that point we never return back to there. Yes, we come close, but we never touch P4 again. And this is kind of a way that you can maneuver yourself through these pivot points, through these ranges. So that can be very helpful to add to your trading skill set. I really think this is the best product that the Academy offers. There is nothing that I use more. There is nothing that has been as beneficial to me than this itself. And I really do think it helps teach the very structure, the basics of support and resistance line. If we really start thinking of these key levels of support and resistance, we'll trade a lot more cleaner. You'll know that when the rejection comes from like this, from these levels, you'll know to get into a buy. You'll understand why. When we see price action like bearish engulfings forming at these levels, we'll know to get into a sell, because it is at the top of the range and it's at key levels. So to summarize on everything that I kind of went over, because I did go over a lot and say quite a few things, pivots sets you your key range, the range in which the market is moving in the immediate. Utilizing pivots, you can understand where you currently are in the range, and the likelihood of when sell moves or buy moves are going to set up. You can actually start to begin and plan your setup for when price is interacting with certain levels within your pivots scale. So when we see price touch R8 and form price action for a sell movement, we know we can trust it a lot more than it being at, let's say, I don't know, S2. It's a lot more convincing to sell at the top of the range. One, because you'll have less risk in terms of it. It's very rare that it will buy or sell out of the range. So if you're selling at the top of the range, you have obviously less stop loss than if you were selling towards the bottom of the range, because then you technically have all this, the value still has all this ability to go, and you could be selling for something short that's not even worth it. Now, don't get caught in those kind of trades. There could be moments here where you saw a bearish engulfing and you thought, oh, well, I'm going to take the sell at pivot level. Yeah, you probably would have got your R8 profit here, but if you didn't realize what was going to happen at this point after seeing rejection, you've got all this. You've got all this that the market can eat into. So again, this teaches you about being smart, getting into trades at the right point of a range in market. Today you would have been absolutely killed if you'd have got in at the wrong points of range in markets. We can see how tightly together these candles are quite commonly. Price really didn't want to shift that much today, and it did range quite a lot. If we go into the 1 minute, you'll see at one point of the day when we were streaming, it was simply up and down. And now if we don't understand that we're at the bottom of the range here and we're breaking out of what this range was here, just draw that real quick. So we have price ranging within this zone here, then we get a breakout here. Now if you get a breakout to the downside, normally you trade the breakout, right? So you sell the breakout. But if you're not aware that this is actually at the bottom of your range, so this is here the bottom, this is SO, if you're not aware of that, then you're not even going to look for buys at this point. You're going to be trying to sell the breakout. You know what I'm saying? So pivots gives you that added insight, that added perspective to understand that, okay, yes, we broke out of our range in market and we should sell breakouts, but we're actually competing with SO, one of our strongest levels of support. And from that point there, we see S1 turns it around, we get a pin bar away from that. And even in the 1 minute, we can start to see those kind of formations. We get a huge pin bar here off of that key level anyway. So yeah, I don't want to go ahead and say like it's a no-brainer, but it's pretty simplistic. You don't want to overcomplicate it either. I think a lot of the time if you think too much into what's going on with pivots, it can confuse you. It is simply, this is the heaviest level of resistance and this is the heaviest level of support.